Welcome to the Movie Business Podcast, picking up where Movie Business Book left off. I'm Jason Squire, hosting a wide range of industry talent and executives to answer fundamental questions about the business today. Here we go. And we get into studio accounting with ILAN HAIMOFF, a partner at GHJ, the national accounting firm, where he leads the profit participation services practice. His specialty includes forensic accounting on behalf of talent, investors, co-producers, and distributors. With over 25 years serving clients in entertainment and financial services, he's overseen over 100 audits. ILAN is sought after for panels and articles and is a certified public accountant, a certified internal auditor, a certified fraud examiner, and certified in financial forensics. Welcome, ILAN.
Thank you very, very much. I appreciate it.
Oh, thanks so much for being with us on the Movie Business Podcast. So let's jump right in and ask, what are the secrets of studio accounting?
I really like the word secrets, but maybe after I answer the question, there will not be any secrets. So here's really the best way to answer the question. For many years, in fact, for many decades, studio accounting was synonymous to what we are familiar with as Hollywood accounting, which has a negative tone to it, right, Jason?
Right.
But as you go deeper into what is called studio accounting, it is supposed to really, at the end of the day, account to profit participants, and those are, directors, producers, actors, and even investors per the deal, the agreement with that profit participant. And the accounting really is for the distribution revenue and the distribution costs that, again, per the agreement, are supposed to be reported to the profit participant, and whatever net profit comes out of it, it's due to the participant. So really, at the end of the day, it comes down to the word intent of the agreement. How is one reading the agreement versus the other? And that's essentially what this is. That is the secret.
I really think that's so helpful clearing up this myth of Hollywood accounting. And thank you for being so clear about why people audit. It's always a contractual provision and issues of interpretation. It takes a real diplomat to do this. My goodness. You were in the diplomatic corps, no doubt.
You're right. Diplomat is probably a good word. I've been honored to take a fairly in-depth negotiation class. So it's not just being a diplomat. It's really working to assist ultimately with negotiation between the different parties involved, for sure.
Well, that has a lot to do with it. Well, let's back up and check on go through the key steps in performing an audit.
Okay. So the key steps are, assessment is the first step. Typically what happens during the assessment stage, people come to us and say, do you think we should audit? And so what we do is we review the underlying information, whether it's the deal, the latest reporting in terms of accounting and other information, and determine based on our experience whether it's worthwhile pursuing an audit. So we come up with a recommendation. And if the participants' representatives agree with our recommendation, the next step would be notifying of the audit. It's actually a contract requirement that you need to formally notify of the audit. And then once you notify, you effectively go into a queue. And every studio has a different queue and different approach to it. And you, at that point, simply wait until the time for the commencement of the audit. And it could take, in some cases, it could be a few months. In other cases, it could be a few years. It just depends on a variety of factors. But then once we're all patiently waited, that those months and years, we do get to perform, my goodness, finally, the audit, and then ultimately issue a report with various claims based on the audit. And then after you complete the audit itself and issue the report, the final stage is the settlement and negotiation to resolve those claims. And if those, very rarely, but there are going to be instances where if it's not resolved, based on the contract, it may need to be moved to a next stage, which could be mediation, it could be arbitration, perhaps even, depending on the contract, litigated in the courts. But really, most of the time, really what you do in that stage is, from our perspective, we're supporting the participant's team, which is usually the attorney, the business manager, the agent, with negotiation and settlement of the claims in our audit report.
Let's back up, and if you could kindly fill in the key step of the audit itself. What's involved in the audit itself?
Good question. So every audit is a little bit different, and every audit in different studios could be slightly different, but in general, it works like this. You have a pre-planning discussion with our client, in this case would be the participants' reps, just to reconfirm the scope, because they've waited, right? So we are getting close and close to the point of commencement of the audit, so we do a pre-planning conversation with the participants' reps. We also have concurrently conversations with the studio about pre-planning for the audit commencement date. We double check, by the way, on any tolling expiration. What that means is, based on the contract, that the client's reps need to follow up with the studio to ensure that ultimately the studio allows us to perform the audit to the earliest possible date, and we don't want to lose any periods or any statements. So it requires some pre-planning, really, essentially. So there's a pre-planning stage to this audit. And what will happen next is there's going to be a first day of commencement where we get generally a standard data dump, effectively. Post-COVID, now everything we're doing, or I should say substantially everything we're doing, is remotely. So we get information dumped onto somewhere on the cloud or somewhere within a place where the records are available electronically for us. We make our initial requests and then we wait. And then over the course of the coming weeks and months, we go back and forth and review records, ask questions, get answers, ask more questions, and so forth and so on, and it's essentially a transfer of information back and forth. And throughout the audit, we keep our clients' reps up to date. If there's anything significant comes up, or if we need to clarify something, we reach out to them. And then toward the end of the project, we begin to prepare for what we call the exit meeting with the studio team. There's just going back to the studio team, there's one dedicated team that handles all of our audits at every studio around here in California and around the world, in fact. And that exit meeting is when we discuss all of the issues that we have identified and any open items that remain. And then following that, we draft a report, share it with the reps for any initial reactions. And following that, we finalize the report. And then that report, and that's really important, needs to be submitted to the studio. And the reason it's so important is because our audit report effectively represents, from a legal standpoint, what we call objection to the reporting. That's very important. And then once the studio receives and they confirm that they received the report, again, with all of our claims, typically there's going to be an initial settlement meeting that we're a part of. And then up to that point, we step aside, and then ultimately the participants' reps conclude the settlement discussions directly with the studio, which is typically confidential.
Well, that sounds really thorough and intense. So a lot of it then, it seems to be comparing the contractual language with the actual statements that are generated.
That's part of it. Yeah, I mean, I think that there's a couple of different things that you're looking for. You're looking to see if there are any basic errors, like, for example, miscodes or math errors, or sometimes you may have misclassifications. So there could be just basic accounting errors that come up, and they come up almost on every audit. But you are correct. The majority of our energy is focused on, has the contract, as again interpreted and understood by our client, been applied correctly onto the waterfall reporting to our client. So in other words, for example, revenues, have they been reported to in accordance with the agreement? There are certain revenues that are required to be applied a certain way, whether it's on a royalty basis, whether it's on 100%. And then you've got expenses, different expenses being charged. And the question again, is the agreement allow for those expenses to be charged or not? So you're right. So the majority of our time is determining if the contract has been followed, again, as our client understood the contract to mean. So the intent is very, very important for us.
Well, that really does help in answering the next question, which would have been, what are some of the common issues that arise and how are they resolved?
So, you're right that I partially answered the question, but I actually wanted to go back to it. So, Usually, we find a lot of these, what I call errors, whether they're miscodes, math errors, even contractual black and white errors, as I call them. Those usually are found relatively quickly, and we bring it up to the attention of the counterparts, and they may often agree either to say in the context of settlement or on the next statement. They may actually simply say, "Oh, we'll get that corrected right away." So those are things that really don't make to the settlement discussion. It's usually resolved well before that, unless they say we'll just simply add that to the overall settlement. Again, as I said before, agreement interpretation claims really is I would say that is really the core focus for the audits. Agreements may not be clear, right? You may look at an agreement and say, I'm reading it one way. I may be looking at the exact same language, and I will tell you, Jason, I read it differently than you do. So there is a question as to what was the intent, and what does our client believe that the intent was behind that language. And that creates quite a bit of a challenge, right, in understanding what was the intent and how was it applied, and is there a variance between what our client believes should have been reported and what the studio believes should have been reported based on the agreement language. That where it gets really complicated is where agreements don't actually get signed. Sometimes agreements are just a messy set of records where you've got notes going back and forth and red lines and emails that are outside the agreement itself, where you're trying your best to understand really what was going through everybody's mind. But ultimately, those are the types of claims that I would say would be the majority of our claims, interpretive types claims. We do have a couple of other claims. One is what I call equity claims, but other call it fairness claims. But those claims are the type of claims that are not, you typically don't include because the agreement was followed. In other words, the studio applied the contractual language properly. The question is, was that language fair or equitable, and could the client or the participants' reps really have an opportunity to negotiate them? And I think it's very difficult to negotiate them. It's almost like as if you're going into getting a new phone or getting a subscription. Typically, it's very difficult as a consumer to negotiate those terms with the phone company, right? I mean, you just simply have to accept it.
Right.
But ultimately, there's a question of equity. And then finally, open items. One of our, and I'll remember this for the rest of my career, there was actually a studio executive who said an audit never ends, an audit simply stops. And the question is, when does it stop? And so we're left typically with open items, and those open items, depending on their materiality, get resolved as part of the settlement. So those are left as what we call open item claims. You asked me a very important question. How are these resolved? I mean, that's essentially the negotiation stage and the settlement stage. That really is a back and forth between the participants' reps and the studio, going back and forth and trying to find ultimately common ground and trying to find a way to settle, trying to find a way to find a reasonable conclusion to the audit by doing more research, going back to the notes of the initial negotiation of the deal. It gets tricky, it gets complicated, but ultimately things get resolved. It takes sometimes a short period of time. In other cases, it can take years. It just depends. But that is really the heart of the negotiation, is around interpretation claims.
Wow. And finally, Ilan, what are some of the lessons learned over the years?
I love that question. So we've been doing this for a very long time, and I say that, and not me individually, but our practice, goes back in one iteration or another to the late 1960s and early 1970s. Just that's how far back we go. And when you look back at all of our experience, here's really what I wanted to share. One is, an audit is simply part of doing business in Hollywood. I think for some of our newer participant clients, they're concerned that by triggering an audit notification, it might create tension. And all I continuously tell everybody is, don't be concerned about that because it is part of doing business. And in fact, every studio has a whole team dedicated specifically for audits. It's part of doing business. The next thing that comes to mind is an audit is not always needed. Okay, it's one thing to have concerns and red flags and whatever it is that comes to mind. When we review, if you remember during the assessment stages, we don't always come up with audit or don't audit. There's some things in between. I mean, you can have, hey, we could inquire on your behalf with a studio and try and resolve it on your behalf. So that's what we call inquiry with client's permission. We have what we call limited risk assessment. So that's really more targeted areas that we focus our energies on. And then sometimes we even suggest we could settle specific issues on behalf of the client without doing an audit. So there's different things you can do. An audit is not always the answer. I think that the next thing that comes to mind is being proactive with reviewing periodic statements. What that means is I don't think you want to wait until you think about performing an audit. I think if you have the responsibility of monitoring statements, I think that sometimes if you pay attention to those statements coming in, you may see something that looks extraordinarily unusual, and you may resolve that without even really doing an audit. But so really the most important point here is monitor. Don't wait until it's time to audit. And when I say monitor, it's not only the waterfall statements that come in that show the revenue and the cost and what's the participant share. Sometimes you have to monitor for dates that are contractual. So for example, if you wait until year 5 beyond the initial release of a television series, and now you're in your, say, 3rd or 4th season, and at that point you decide, I think I may want to audit, depending on the studio, you may be out of luck, meaning that contractually you should have notified the audit perhaps in year 3, and by waiting until year 5 or year 6, you may have lost periods and you can't go back to them and you cannot perform audits in those periods. So that's what I'm saying is monitoring both the statements as well as dates that are required. That's another lesson learned. And then the final point that I wanted to share is there's no good and bad in this story of profit participation. When you dig deep into it, very often we find that there are two sides to interpreting the deal, which at the end, in most cases, the two sides come to a resolution or a compromise. So it's almost like taking us back to the initial question, Hollywood accounting, right? So at the end of the day, it is a forensic review that we perform on behalf of the participant through their, obviously working through their representatives. And then we work virtually at the studios and we're digging and looking for the answers. But at the end of the day, things get, for the most part, resolved behind closed doors, confidentially, of course. But the most important point here, there's no good or bad. And I think that's really the key important point.
Wow. This is a fabulous overview. Thank you so much, ILAN HAIMOFF, for going through the mysteries of studio accounting on the Movie Business Podcast. Thanks, ILAN.
You're welcome, and thank you for giving me the opportunity to share.